Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today has over 13 years of financial services experience and got involved in real estate after seeing his most successful clients benefit from their portfolios, and he now owns a real estate investing business. Brent Sutherland is a financial planner with Intelivest. Brent, welcome to Purchase to Profits. It's great to have you on the show.
Seth, thanks for having me, buddy. I really appreciate being on the show.
No, it's my pleasure. And we were joking before that I'm happy to have one of the good guys in terms of financial planning on the show, just because, you are involved in the real estate.
Yeah, I get that joke a lot when I talk to real estate investors is that, oh, you're an advisor? Well, we don't really want to talk to your type around here, but it just takes a little conversation to really understand that I'm into real estate and I kind of get both sides of that. So it's smoothed that gap pretty quickly.
Yeah, for sure. So let's start off and talk about your real estate goals right now. What are you looking to accomplish?
Okay, well, normally with my goals, I kind of, at the beginning of the year, I'll try to outline what I would like to accomplish during the course of that year. I know a lot of people, they look long-term, 5 to 10 year plans. I lose my train of focus if I look that far ahead. Yeah. So I just try to look in the immediate future for what's happening over the next 12 months. So during this year, what my objective was at the beginning of the year, since my real estate portfolio right now is still relatively small. I only have 9 residential properties. What I wanted to do was get into the multifamily, the commercial space this year. So that was my target. It looks like here in the next couple of weeks, if all goes as planned, that I will be closing on a deal that involves commercial building and a small mobile home park. So I'll be stepping into that territory, like I said, if all goes as planned.
Yeah, no, that's really exciting. Good for you.
Thank you.
Yeah. Lots of times, and we were talking about this a little bit before as well. We've got, the financial services side on one side. We've got the real estate people on the other side. A lot of people are saying, let's say I go speak with my financial advisor, they'll tell me, they'll show me stocks, mutual funds, all that sort of stuff, but real estate won't come up in that conversation. Why is that happening? And, what can be done to kind of merge the two camps?
Well, I wish there was more that could be done to merge the two camps. I think that we probably will see more of that potentially on the horizon. But as the way things stand right now, there is just some conflicts that don't allow traditional advisors to really talk to clients about real estate. And it's really for one of two reasons. One, the compensation structure really doesn't allow for it. If you think about most advisors, what they're working with is a system that they get paid on whenever they manage money for clients. And they're only licensed to sell products such as mutual funds, stocks, bonds, some alternative products that fit nicely into a diversified portfolio that they would manage for the clients. If you think about all those things that I just mentioned, real estate does not fit into that category. They're not real estate agents, so they're not selling real estate. So the chances of you going into an advisory shop and talking to someone about investing in real estate, if you were to say, here's $500,000, $1 million, I want you to manage this for me. If it's not going to pay them back in return, the odds are very low that they're going to recommend you go into that type of product, even if it would be probably the best investment for you. And that leads into the second factor, which is just the educational component of what prevents advisors from talking about real estate is that I went through, the traditional education path, and I'm a certified financial planner. And nowhere along those lines did we learn anything about how to evaluate, properties themselves as far as looking at it as an investment or evaluating markets or anything related to real estate investing other than the traditional real estate investment trusts, which are basically like a stock that gets traded over an exchange. So it's not the same thing. So I think the conflicts of interest from compensation standpoint and then the educational component that's just not there with the financial planning curriculum, those are the two big hurdles that's preventing most advisors from having this conversation. So really what happens is the advisor has to go out and educate themselves. And the chances of that happening, since there's so much that you have to do already to educate yourself on all these little nuances that happen in the traditional planning world, it's just most people don't have time for that, and most people don't have an interest in that. And so it's probably not going to happen with most people. But Yeah, I found this path, and I kind of got onto this real estate investment train earlier, and then started doing it myself. And so I tried to merge the two with my financial planning practice that I have now, which is very uncommon, but I'm hoping that more and more people try to take this path going forward.
Yeah. And so you were a financial planner, and then you kept seeing your clients, having success with their portfolio, and that's what you got it. That's what got you interested. Is that right?
Yeah, I mean, absolutely. It was because I was fortunate enough to be in a position where I was working with people who had money, right? And so I was looking at what I was doing, and I was kind of going the traditional path. I was saving money into 401ks, Roth IRAs. And all these types of accounts have rules attached to them that state, you're not really allowed to pull this money out until age 59 and a half. Well, there's days I was very frustrated at work, and I think there's got to be a better path to get me towards financial independence sooner than age 60, And so I was looking at some of the clients that I was working with, and there were some younger individuals that were there, and they seemed to just kind of have no stress in their life. They had a lot of cash flow. I knew their financial picture because we discussed. And so I just started talking to them more about what they were doing on the outside, maybe outside their portfolios. And most of the times these individuals had real estate investments on the side. So even though I kind of tinkered with that idea before, this really got me on board with that bandwagon. And so I started delving into what the power of real estate could really deliver to me in the form of getting me on the path to financial independence a little earlier than I had planned. And so once I got in, after seeing it with my clients, it was just kind of like you guys probably have all witnessed, it's kind of an addiction. Once you see it work, you want to keep going.
Yeah. Yeah. And there's so many, I think it's unfortunate that real estate's not brought up more, because there's so many advantages, especially for high income earners. The tax advantages are, almost worth it just on their own, right?
Absolutely. I mean, if you think about someone who's working a regular job, so W-2 earnings, you have to report all of that to the IRS, and you're going to get taxed at the highest rate possible. It's actually getting deducted from your paycheck before you even have a say in the matter.
Yeah,
it's the complete opposite situation with real estate investors, is that there's so many tax advantages in the form of depreciation and write-offs, and now you can do cost segregation analysis to take so much depreciation in year one. You can't dismiss, what kind of impact this has on your tax return. It's incredible. So you could be making $500,000 through real estate, and you could be making that same $500,000 through a W-2 job, and the tax situation is going to look completely different.
Yeah,
completely different.
Yeah. So what sort of things then would you say, based on your experience on both sides, that real estate investors are kind of missing in their financial planning picture?
Well, I'm a big advocate for everything real estate investing, so it's hard to pinpoint too many things that I think that they're missing. But the one thing that I do notice oftentimes when I'm working with real estate investors is that they're so focused and excited about what they're doing on the real estate side of things, that's all they want to talk about. And they tend to overlook some other facets of their full financial picture that they just didn't know that they were missing before. It's the blind spots. And that's my job. I try to point out the blind spots. One thing I noticed that a lot of real estate investors miss is that they're lacking setting up basic financial protections, not on the real estate investments, but on themselves. And in particular, protecting their family members. And this could be in the form of not setting up a properly structured estate plan, and also not having basic life insurance on themselves. So these are two pretty, I think, fundamental concepts, but they just get overlooked because there's so much focus on the real estate investment. So you think about it, most real estate investors have so much going on. They have properties here, there, everywhere, different types of structures, maybe partnerships with people, and they're working with all sorts of individuals on each project. There's a lot of hands in that mix. If something were to happen to that particular individual, and this does occur, I think people don't want to think about it, but if something were to happen to them, their family's left with this whole big picture to try to piece together. And with all those hands in the mix, it can be very complicated. So just something as basic as putting together a checklist of, here's each project I have, Here's all the people involved. Here's the contact information for all those individuals. And then kind of using it as a foundation to build your will around, to build some trust protection for your kids and family around. That can just work wonders for making sure that your family is left in a good position if something were to happen to you. And then also I mentioned life insurance just because if you think about real estate investments, they're not particularly liquid. And so if you were to pass away, then your family had to deal with the estate of yourself, and there's no liquidity to possibly pay taxes that might be owed at that point in time. Then it could be the situation where you have to sell off some of the real estate investments, and it might not be an opportune time to do so. So that life insurance can provide liquidity to get your family through the rough patch and to provide for those taxes that might be due at that particular time. So those are just two of the big ones. We could go into a lot more detail, but those are the ones I see missed most often.
Yeah, no, those are good points. And because, the reason why most people invest in real estate is for the family anyway, right? We want to leave a legacy for them, right? So it's incumbent upon us to make sure that's able to, transition, let's say the worst case scenario happens. The other thing with the insurance is, an insurance policy can be a great tool because, my mind just went like the overfunded insurance policy can be a great leverage tool too, that lots of people don't even consider.
Absolutely. That can be something that's tax advantaged. It's basically a savings account. And some people hear the concept, you kind of bank on yourself and all this stuff, infinite banking. It kind of falls into that category, but these funds can be used, to pull out to fund other different types of projects. And then it's there at the end of the day too, if your family needs it. So that can kind of serve a dual purpose, so to speak.
Yeah, no, I absolutely. So circling back to real estate then, because you're kind of juggling two different businesses. How have you, or I should say, what rituals or routines have you developed that have allowed you to kind of wear both hats at the same time?
Well, I don't try to structure myself too hardcore each week as far as like having a rigid schedule. But one thing I do adhere to is that I'm not as disciplined as I should be, but I do have an interest and appreciation and a curiosity really about all things really kind of health and fitness. And so one thing I definitely try to do as part of my routine is every morning I want to do something active if I can. I don't always adhere to that, like I said, but I preferably do that in the AM first thing because I feel like whenever you get the blood flowing, it not only benefits your muscles, but that blood flow goes to your brain too. It kicks up endorphins. It gets you on the right track to start the day. So even if I wake up in a funk, if I start doing this, it kind of pulls me out of that funk, and I'm ready to kind of tackle whatever's ahead of me for that particular day. There's a guy I really like to follow. He has a podcast called The Model Health Show. His name's Sean Stevenson. And one quote that he says that I really like, he says, when your body moves, your mind grooves. And I feel like that's 100% true. If I don't get going in the morning and do something, I kind of feel like I'm stagnant for a while. So that kickstarts my day and helps me to get motivated to jump into any and every task I have on the docket.
Yeah, I like that. When the body moves, the mind grooves. I'll have to steal that.
Yeah, I didn't come up with that, so you'll have to give credit where credit's due.
Yeah, that's a good one. So out of all the deals that you've done so far, is there one deal that stands out as a Keystone deal that made a big impact on you and your business?
Yes, absolutely. And I would say this is more probably of a change in mindset or strategy than maybe just a particular deal. And I'll explain that is just because, like I mentioned before, I was kind of originally on the traditional path of saving as much as I could. I owned a condo at the particular time where I had this revelation. And up until that point, my idea of financial freedom was to pay off the mortgage, save everything I can into different types of investment accounts. And then once I kind of build up that net worth to a particular, mark, then I would be financially independent, financially free, whatever you want to call it. But once I started really digging in and looking, like I said, at people that were doing things probably on a better path than I had really witnessed up to that point, I was taking a look at my full financial picture, and I noticed I had all this equity tied up into that particular condo. And I was thinking, okay, well, that stuff's there, and if I pay this off, that's fine, but what is that equity doing for me? And at that particular moment, it really wasn't doing nothing. And so it's kind of dead equity that I just have tied up into this asset that was not furthering my path towards financial independence. So what I did was I made the move to sell the condo, take those funds and use those to jumpstart my path into real estate investing. So in this particular situation, I had a condo that I sold for $285,000. I had roughly $165,000 of equity that I pulled from that, net of all taxes and fees and everything after closing costs. And so I used that to buy 8 properties over the course of the next year. So those 8 properties generated for me about $2,000 passively, net after everything, cash flow each month. So you compare that to roughly the $1,600 that I was paying towards my mortgage and taxes with the condo and HOA fees. And then after renting from that point forward, I made the move from not owning to just renting. My all-in expenses from renting were only about $1,400 at that point. So if you look at the difference between what I was paying and then what I was earning passively, I still had money left over after paying all my living expenses. So I went from this shift of negative $1,600 to about probably a positive $600. So that's a swing of $2,000 a month just by making that one change. So I would have to say my first deal might have been a deal that I didn't know was on the table, but once I made that move to sell my condo and then move into the real estate investment properties, then that had to have been the biggest deal for me. That all occurred within basically a 1-year time frame, which changed my life.
Yeah, that's an awesome story. That's great. So a lot of people out there listening might be, they might recognize the benefits of owning rental real estate. Maybe they have the same mindset that you used to have, but they're kind of scared to take that step of selling it and starting to invest. What sort of advice would you give them, having lived through it yourself?
Well, I think it's always going to be scary jumping into an area that you don't know. And it's just uncertainty. It's just the human nature. That's the way we're built, because you do something and your neighbors are doing something. Everyone's saving into their 401k. So it's the social norm. It's accepted. It's easy to understand. And so that path is very, very, I think, simple to kind of just carry forward with. But when you start looking at real estate as an investment over just an abode as your personal residence, then that becomes more non-normal, right? So you have to look at it and think of it a little bit differently. But I would have to point out the fact that just because you're renting, I'm sorry, I have another call coming in.
Oh no, it's all good. You're a busy guy.
Yeah, but I'd have to just say that you have to change that mindset. And once you make that move, the fear comes off the table at that point. Really just jumping in, trying it out. I went through analysis paralysis myself. I probably spent 5 years maybe running numbers, creating spreadsheets before I actually just bit the bullet. And once I did, and once I took that step, you kind of realize that it was only fearful because you didn't know exactly what you were getting into. And the uncertainty just caused that fear. But once you cross that hurdle, then all of a sudden that becomes normal. And so it's just a matter of actually just taking the step, dipping your toe in the water, and just trying it out. Really, you learn as you go.
Yeah. And I'm glad you brought up the renting aspect, because a lot of real estate investors, they own their rentals, but they rent their primary residence. So is that something you're seeing from a lot of the successful real estate investors right now?
With people that I'm working with, it's becoming more of a common conversation, and especially the younger crowd. And I think the reason why is that people are putting a focus on financial independence, and that encompasses a lot of things, right? And financial independence for a lot of people encompasses, it's like location independence as well. And with renting, you have a little bit more flexibility over where you reside year to year, possibly even shorter than that period. You can sign a 6-month lease. And I think a lot of people nowadays are working remotely as well, so they have the option to live wherever they want. And they're not necessarily tied down to a particular residence, but they still want the benefits of what real estate investing can provide them. So for them, it can make perfect sense to just rent where you're living, because it gives you flexibility to move whenever you so choose, and then to put your money and invest in properties that you're going to rent out to someone else, because then your capital can be put to work towards generating passive income which then furthers your financial independence path. So I think for a lot of people can make a lot of sense. Now, for certain individuals too, they just want to invest in where they're living, and they want to stay in the same communities for their entire lives, or at least for the next 10, 20 years. They know that. Then at that point, the conversation probably makes a lot more sense to just invest where you are in your property. And if you're house hacking and stuff like that, that can make a lot of sense as well. But it's different for every person. But I do see the conversation coming to the forefront now a lot more than it used to, of renting your primary and then investing where it makes sense.
Yeah, no, absolutely. And you see lots of, Grant Cardone has a high profile right now, and that's the message he puts out. Richard Wilson with the Family Office Club, same thing. Like these are guys bringing in a lot of money and they're renting. So,
yeah, absolutely.
Yeah. I know getting into real estate made a big impact on the return you're getting from your money and your income. What other impacts has getting into real estate had on your life so far?
Boy, I tell you what, the quality of life that I've been able to live since getting into real estate has improved significantly. And it's in a number of different facets. I probably would have never started my own business if I didn't have these assets generating passive income for me, because that gave me a little bit of financial security. It was kind of a cushion underneath me that, if push comes to shove and the thing doesn't really succeed, my business, I still have some assets that are generating income for me. So I can pay the bills, I can pay the rent. We're going to be fine from that regard. So it gave me the courage to start my own business. So that was huge, right? And it also saved some money to have a little bit of a runway just in case some curveballs popped up down the road, which they always do. But as far as just lifestyle flexibility goes, my situation has changed dramatically. I mean, now with starting my own business, which was, I feel like that was something that the real estate provided me the ability to do. I have flexibility on my schedule that I can, schedule meetings and schedule vacation whenever I choose. And also the passive income allows us to travel and do different things more often. So I can work from other locations and I still have money coming in on the side. So my wife and I, we take trips more often than we used to just because we have more flexibility to do so. I think sometimes we make a purchase here and there that we might not have made before because, we have this account that is building up money that I'm using hopefully towards new investments. But every now and then it's nice to take some off the top of that just to use towards something fun. So we feel abundant now. And I think that's probably the term that I would use over anything, that we probably didn't feel that type of abundance before. There's something that has to be said about generating cash flow from an investment that is completely different than putting money into the stock market and just watching it grow over time. When that money hits each month and you see that cash accumulate, that gives you more of a sense of abundance than anything that your 401k will ever deliver to you.
Yeah, no, 100%. Plus there's leverage. That's
absolutely, yeah.
So, you can buy, let's say, a $300,000 house for, less than $100,000.
Yeah.
Yeah.
100%.
Yeah. So let's say looking ahead 10 years from now, where do you think your real estate business will be?
Well, I hope to, and my goal right now is, like I said, to kind of jump into the commercial space. I really like the idea of equity creation, which is something you don't really get with just the traditional buy and hold, passive income oriented real estate investments. So I'm looking to hopefully create equity in some of these projects me and a couple other guys as Gorning and his partners going to work on, and then use that money to, one, filter back into other projects, but two, take some of that to then buy these just kind of buy and hold investments. So over the course of the next 10 years, hopefully sooner, I hope to, go through a few of these projects, continue to buy some other assets that are going to build up our passive cash flow from myself and my family. And then who knows, in 5 years time frame, like I said, I try to keep things kind of short term just because it helps keep me motivated. But that's my goal, at least in the immediate horizon, is to buy, create equity, use that money to put back into products that are going to kind of build up the cash flow. And then I would just really like to build a life that my wife and I, and then if we have kids down the road too, can really just enjoy. And this is the path that will deliver that to us, that the path I was on before would not.
Yeah, no, that makes total sense. And we'll have to have you back on in about a year once you've closed some commercial deals. And you can let us know how things went.
Oh, I'd be happy to, and I'd be thrilled to deliver the news as long as it's good, right?
Yeah, no, for sure. So Brent, if somebody's looking to get in touch with you, learn more about what you're doing, where can they find you?
Well, probably the best way is through my website. The name is called Intellivest, but that's without the I. It's just Intellivest. But I'm on Facebook. I'm on Instagram, Twitter, pretty much all the social platforms. But the website has the most direct contact information for me. So you can go there, and then it's just Intellivest.com. You can shoot me a line, or you can connect with me on social media. Happy to reach out to people and answer questions. Anytime someone shoots me an email, I'm always pretty quick to respond and happy to help if I can.
Yeah, that's great. Well, Brent, just want to say thanks so much for taking the time today and sharing your success with us.
Oh, thanks for having me on, Seth. This is fun.
Yeah, it was my pleasure. And to you, our viewers, I wish you well on your journey from purchase to profits. See you next time.